Let me ask you a real question. When you walk into a bank for a mortgage, do you honestly believe that they're giving you the best offer? Or is it just habit, convenience, maybe even fear of trying something different? Today we're diving into the real difference between a bank and an independent mortgage broker like myself. And then we're breaking down something nobody ever talks about, the true cost of financing a home. Because the interest you pay over time can change the course of your life. And by the end of this episode, I promise you're going to be looking at mortgages a little bit differently, if not drastically differently. And if you want me to run your real numbers, reach out anytime. Free consultation, no pressure, and just the truth, because that's what we do here at Real Talk and with Anchor Home Loans LLC. So here's what most people don't understand. A bank has one rate sheet, one set of programs, one underwriting department, one opinion about your loan. That's it. If their guidelines don't fit your profile, guess what? You're done. Let me ask you this. Why would you walk into a store with one pair of shoes and hope they magically fit? No, you wouldn't do that. So why trust the biggest financial decision of your life to a place with only one option? Now, as an independent mortgage broker, it's the complete opposite. I have 60 plus lenders that I have access to. I match you with the lender that fits your situation because not all situation fits the same shoe. I don't fit with their corporate structure, and here's the kicker. Wholesale rates from lenders to brokers are almost always lower than retail bank rates. If you're a buyer watching this saying, wait, so you can shop for me? The answer is yes, of course I can. If you're a realtor thinking, can you run a side-by-side scenario for my clients? Guess what? The answer is absolutely. Send them over. I'll take care of them. Let me give you a quick example. A couple came to me last month. Bank was quoting them a rate around 6.5% on a conventional loan. Decent credit, solid income. The bank just didn't care. I shopped across all my lenders, got them at a 6.125% rate and some lender credits. That saved them alone $312 per month and over $112,000 in interest over the life of the loan. Same borrower, same file, different results because I had options for them. Realtors, this is what helps your clients actually get to the closing table faster and saving money. I know a lot of realtors don't like to get involved in the mortgage process, but honestly, we are that missing gap to the finish line. Yes, realtors do a great job getting clients into the door, showing them homes, but guess what? The mortgage company is the most important aspect of this because we are the ones that control the money. And as a realtor, I know if I had my real estate license, I would want to make sure my clients are working with the best mortgage broker and with the best possible loan terms and rates that there are. So that way they're having a great experience. They tell their friends and family, and that equals more referrals and more buyers with keys in their hands. So why banks push what benefits them? Banks are not in the business of saving you money. Let's say that again. Banks are not in the business of saving you money. Let's do it as a choir. Banks are not in the business of saving you money. They're in the business of maximizing long-term interest revenue. That's how they stay afloat. They loan money to make money and loan your money to make more money. That's why they have interest rates. Ever wonder why they never explain what a TIP is? Who knows what a tip is? I'm not calling about a hotline FBI tip. Tip in our world is a total interest percentage. Because if you saw what you were actually paying over the years, you start asking questions they don't want to answer, or maybe they don't even know how to answer it. But it's an important question. And let me ask you a question out there. If a mortgage costs you an extra $200,000 in interest over time, does it really matter if your monthly payment is $150 cheaper today? These are things you got to look at when you're out there shopping. A lot of times, if we can make it work, I'll do a 25-year over a 30-year because that might save the client $80,000 to $100,000 just by lowering the term. And yeah, they'll pay a little bit more monthly. I think it depends on the loan amount. But think about that. Those are things you got to wonder when you start buying a home. Is this $500,000 home going to cost me $1 million over the course of time? And the answer is yes. So let's talk about the financial education moment, how interest really works. Let's slow down and talk about how a mortgage really functions. Most people think a mortgage is you pay the payment, balance goes down. Wrong. In the first 5 to 10 years of most loans, you're paying almost all interest. Think about that. Front load interest because that's where they make their money. They want a return on their investment and quick. So the longer the loan term, the more you finance the bank's future, not your own. This is why TIP matters. This is why amortization matters. This is why choosing the right loan term matters. You're not just buying a home, you're buying a 30 years of future payments, or 50, or 15. Yeah, I said 50 because that might become a reality, and that's a scary one. So I already did a podcast on that. Look back at my last episode if you need to. So let's talk about a cost of a $400,000 loan. Here's the breakdown. Let's get into the real numbers here. This is why people usually go silent. This is where they go silent. And look, if this hits you and you want me to run your exact TIP, shoot me a message. I'll break it down for you. A lot of easy ways to do it. So let's start with the new 50-year mortgage that may possibly come to fruition at some point. There's a lot of talks on this. So let's say $400,000 loan. That's about the average, at least in Florida. Obviously, there's a lot higher. There's some lower, but let's just use 400,000. Don't quote me on the interest rates. These are just for experimental purposes only. You guys can fight about that on your own. Obviously, there's a lot of variables with that. So at a 7% on a 50-year mortgage, the payment would be $2,661, okay? The total interest paid, the tip, is $1,396,487. TIP is 349%, 3.5 times the loan value and the home value. So let me ask you, who is the loan really designed for? You or the bank? If a lender quotes you something like this, send to me. I'll compare it immediately for you. Let's get back to reality here. 30-year mortgage. Let's just say the interest rate is 6%. Your payment on the same $400,000 loan would be $2,398. Your total interest would be $463,355, which is 116%. You buy the home once and then again in interest. Realtors, if you want me to put this into a custom graphic for you and your buyers, send me a message. Here's my favorite, okay? If you look at a 15-year mortgage, let's say the rate is 5.25%. So obviously the lower the term, the lower the interest rate. The higher the term, the higher the interest rate. Hopefully that makes sense. Your payment would be $3,211 on a $400,000 loan. Your total interest is $177,976. Your TIP is only 44%. This is the one banks hate because they can't make decades of interest off you. If you want to build wealth faster, this is the ultimate blueprint if you can make it work, okay? There's other strategies out there which you can do. So if you want a 30-year mortgage, so you could, if you needed to for any reason, go back on those lower payments, you can. But I have tools and resources for you on how you can knock that down to 15 years or less. So make sure you hit me a follow, send me a message if you want to learn more. So why people choose the long loan term? Well, you know why so many people stick with a 30-year loan? Not because it's the best long-term move, but because it's the most comfortable move. I feel like in our brains, like we've been warped into this 30-year mortgage since it came out, and that's all most people even know. Look, comfort is expensive. Comfort keeps you where you are. Comfort keeps you paying interest forever. Discomfort builds wealth. Discomfort forces you to make smarter decisions. It's the same in the gym, your finances, your business, and your mortgage, okay? You got to start looking at these things. I just had a heart-to-heart with myself because I preach sometimes and sometimes I got to act on what I say. So I just doubled my mortgage payment of the principal each month. So that's going to knock my term from 24 years left to about 12 years left, okay? These are things you could do so you're ahead of the game, all right? These 50-year mortgages are mind-boggling to me, and it's probably the worst effing thing I've ever seen in my life because why would somebody pay for a 350% more for a house just to save $200 a month? Makes zero sense. If you're in that situation, my advice would be is to rent until you're in a financially stable spot, maybe with additional income to buy a house, okay? That's a reality that most people won't tell you, but this is real talk. I'm going to tell it to you real. If you're not in a position where you could do a 15-year mortgage, a 20-year mortgage, at the worst case, a 30-year mortgage, it's not the right time to buy. Got to really go on the path to home ownership. Talk to me. I'll help you get to those goals when the time is right. We're heading into a market where rates may not drop the way people have hoped. We've been talking about this for years. We're hoping, but as you can tell, over the last 5 years, nothing's really changed. Okay. Yeah, they come down a little bit. We're still above, I think, our overall average over time. But, it is what it is. Okay. There's no reason for them to lower the interest rates when the economy is making money. And basically, the Federal Reserves want the interest because inflation, that's what they do. They inflate things to make our money that is worth one thing, making it actually weaker. So they inflate things so the dollar's stronger. Okay. Home prices, yes, they're staying firm, but they're coming down. But they're not coming down because the value is not there. They're coming down because that's what people are willing to offer for a home. In some places in the United States, I'll tell you, it's not the case in Florida. Inventory is tight. You put a house on the market, it's being sold within 30 days. You come to Florida, you put your house on the market, it's probably going to sit for 6 months. That's the reality. It all depends where you are. Waiting is becoming way more expensive. I keep saying this. There's people during the COVID days when rates were at 2%. Oh, well, wait, prices are going up. They're too high. Well, you would have made a killing if you bought then. I could tell you, with normal income, if you look at the average median income averages during the COVID stages, a lot of people could buy $500,000-$600,000 house and their debt to income would be significantly lower than what it is today. Buying the same house, you would almost need double the income to do so. I've never bought a house at a really low interest rate. I've always refinanced into them. If I really like a property, me and my wife really like a property, we're going to buy it and then we're going to wait for something to happen, take advantage of it at that time. It always works out. Okay. Because if you're going to wait for 30 years, 50 years, you're going to wait your whole lifetime. And that's probably not the best game plan, in my opinion. So you really have kind of two choices. You could either wait for the perfect moment that never exists, it just doesn't, or learn how to make smart moves in this moment so that way you can land the right situation and spot for your family. If you want help navigating the market as it is, reach out. This is what I do for a living. I love it. I talk to a lot of people. I like to share my opinions and what I see out there. So hopefully some of this information is good for you and you can share it with a friend or family member. But it's all about not hyping, no myths, just real numbers. You got to look at the numbers because it has to make sense. People get excited with the picture of owning a home. Nobody gets excited about the payments of a home. So it's good to understand how they both work. Yes, you own a home. You can do all these things to it. You can build equity, build growth, right? And what I think is a safe place to have an asset. But you also have to understand how to make that work for you and not against you. Buyers, if you want a free mortgage consultation, send me a message. I'll review your pre-approval from any lender and tell you the truth. I had one the other day and we found all these hidden things. So everything sounded awesome. I was like, man, I don't know if I could touch that. But then you start digging in, you can see all the different points and whatever they roll into it. Hey, if I can't help you, I'll tell you it's just not for me. But most of the time I can either match or beat it or at least help you get a better deal with that current person. So free service, would love to help you with that. And realtors, if you want a lender who actually educates your clients, which I think is really, really important, breaks down the different terms and interest over time and help you win offers, send me a message. Send me your next scenario. Let me handle the heavy lifting. Just over the weekend, I had such an incredible conversation. Somebody was working with a bank. Well, yeah, the rates sounded good until they talked to me and then we were even lower with less cost. So, I mean, these are things that I could help with. I'm not here to, take clients' money and run. Like, I'm here to make long-lasting relationships and help build the American dream, which is owning a home and getting it paid off as soon as possible. So at the end of the day, you're not just buying a home, you're buying a loan that shapes your next 15 years, 30 years, or if you're fucking bananas, 50 years, that's up to you. The bank's job is to make money off you. Just remember that. That's the bank's job. That's why they're loaning the money for 10 years, 15 years, 20 years, 25 years, 30 years, 50 years. So my job in a nutshell is to save you money, of course, and build your long-term financial health. That's the key here. Your future just doesn't change by accident. It changes by decisions. And a decision to understand your mortgage is one of the smartest moves you'll ever make. Trust me on that. And if you want help making that decision, just reach out to me anytime. I'm here. and I'm always going to give you the real truth and none of the crap or BS that goes behind it, okay? So I'm excited. I think we're going to see some really good things. I've seen a lot more people jump on these 15-year mortgages, 20-year mortgages, because they're starting to wake up. And I think waking up, and if you're not waking up right now, now's the time to start opening your eyes to what's really going on, because it will make you a stronger investor, stronger financially, and in a better position in the long run. So thank you so much for tuning in. This is Real Talk with Matt. You can reach me at anchorhl.com, matt@anchorhl.com, or give me a phone call, 866-245-2025. This has been Real Talk. I can't wait to help you guys on the next deal.